Hello students, myself is Parminder Singh from Prab Kripa classes. Our today's topic is unraveling currency fluctuations and in-depth analysis. Nowadays, the value of the currencies does not remain static. The value of the currencies is constantly fluctuating because there is trading in the foreign exchange market. These currency fluctuations affect businesses, consumers, and also international trade. In this course, we will understand the terms like appreciation, currency depreciation, currency revaluation, currency devaluation, and also understand the difference between these concepts. And we will also understand what is their impact on imports, exports, and consumers, etc. You will also understand whether the government of the country also plays any part in the rise and fall of the currency. We will also understand these concepts with the help of real life examples, and by the end of the course you will be in a position to understand the impact of currency movements on businesses, consumers, international trade, and make informed decisions about your international travel. It means that you will be in a position to understand what is the impact of currency appreciation or currency devaluation or currency depreciation, and you can take informed decisions with regard to your exports, your imports, and you can also decide which country you should visit in case of currency fluctuations. So you will find this course very interesting, and that too in a simple language, and you will be in a position to understand all these terms very easily. Thanks. Now we will go through real life examples of currency appreciation and currency revaluation. Firstly, the real life example of currency appreciation. From around 2003 to 2008, Australia experienced significant currency appreciation. That is, the value of their currency appreciated in Australia. Why? Because there was high GDP growth, there was booming mining sector, and there were robust exports, that is good exports, good in good quantity. The exports were there of coal and iron ore. It was having those reserves, and so it was exporting. Political environment in that country was very stable. The interest rate policy of the Australian central bank was also very favorable. So all it resulted into the appreciation of the currency of Australia during the period 2003 to 2008. Now we will understand the case of currency revaluation of China's yuan currency. China's yuan currency from 2005 to 2010. Prior to 2005, China was adopting the policy of fixed exchange rate system of its currency vis-a-vis the US currency. That is, it used to peg its currency, that is yuan, with respect to US dollar. That is, it was taking steps to ensure that the value of its currency remains stable with respect to US dollar. Then, facing the pressure from US and other trading countries, because the China was having a very big trade surplus. So, facing pressure from US and other trading partners, the China government in 2005 abandoned the policy of fixing its abandoned the policy of pegging its yuan against US dollar. So when it's abandoned the policy of pegging yuan against US dollar, then the currency of its China revalued. Initially, it was around 2.1% when it initially increased the value of its currency, and between 2005 and 2010 the currency was revalued many times by the Chinese government, and during the whole period of this 2005 to 2010, about 30% appreciation in the value of currency of China was there. Approximately 30% increase in the value of yuan was there. When the value of its currency has increased, it had its own impacts. It reduced the trade surplus with respect to several countries. That is, China was exporting in large number to certain countries and importing less. So it reduced the trade surplus position with respect to many countries. It also increased the imports because the cheaper imports helped Chinese people to control inflation, and it also improved the standard of living of Chinese. Increased imports. Exports were adversely affected in case of currency evaluation by China because the exports became costlier for the foreigners, and those industries which were exporting goods to, in other words, the export oriented units were badly affected, and there were job losses also in export oriented sectors. Then there was also pressure on the exporters to improve their performance and to concentrate on innovation so that they can remain competitive in the market. So we have understood the real life examples of currency appreciation and currency revaluation. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.